Okay, so this is the dumpster dive where I find one stock that is completely torn up, hated by the market, beat up, maybe forgotten of, and I bring it to you because another man's trash could be your treasure or my treasure. And in this case, that stock today is Match Group, MTCH. Now, if you haven't heard of Match, I bet you have. Match Group is a company that basically functions in the dating app realm, right? They own Tinder, Hinge, Match, obviously OkCupid, Plenty of Fish, and 45 total brands globally. So there's other brands that they own as well. Now for this dumpster dive, I did something a little different than I've done in the past, and I've outlined some bullish catalysts, so potential bull catalysts, and some bear catalysts. Try to give you both sides of the trade. Of what I like and what I don't like going forward. On top of that, I have some technical levels that we'll talk about near the end as well, so that way you have an idea of what to look for if you do decide to take a trade in Match. Now, to be completely transparent, I do not have a position in Match at the point of this recording or this video, but I do intend on opening a long position in the near future. Now, for bullish catalyst, Match actually acquired a new CEO, and he used to be an executive over at Zillow. And his idea is to focus the platform more on AI-powered innovation, specifically through Hinge and Tinder. And obviously, AI is very big right now. Integrating AI into a dating app is pretty brilliant, in my opinion. Not like fake robot dating, like making fake people to talk to, but in the sense of matching the right people for a certain amount of money. That's a pretty brilliant idea. Hey, we found this person. Like, yes, you could type up your profile and stuff, but seeing how they interact and saying, hey, we found this person who interacts like this and you interact like this, and you'd be a fantastic match, but you got to pay us $20 to connect you. Brilliant. Easy and brilliant. Obviously, there's other ways you could do this, but even getting some AI into these kinds of dating apps, because they're mostly apps, not even websites, I think is going to be amazing. Think about paying a certain fee for the AI to revamp your whole profile. There are people who run full businesses of making people's dating profiles more applicable. You could imagine hitting a button, paying $50 and making your dating app or your dating profile specifically to the specific kind of person you're looking for or whatever. Brilliant. So things like that are what really excites me because it's like the next venture into this space. On top of that, something I don't care about as much, but a second bullish point is that a lot of analysts are starting to look at higher price points. Now, I take analysts with a big grain of salt because I don't trust them. And a lot of the time when analysts go, oh, it's going here, it never goes there, right? But a lot of analysts are looking at like a 20 to 50% upside on this name. Again, I don't really care too much about that, but you might at home, so I figured I'd at least mention it. What I do care about is that Match has specifically seen a 31% or higher, 31% more than surge in call option flow recently, which is nice. And as you can see, the chart's starting to balance out here. We'll look at the daily chart. We'll look through the daily chart here momentarily, but we're seeing option flow in, or bullish options flow come through. Which is obviously going to be a bull catalyst here because people are betting on Match having basically a turnaround here. On top of that, if we're looking strictly at the financials, their free cash flow is still pretty solid. They've talked about buyback plans. They might be buying back more, especially at this price. And again, this is 84% off of all-time highs. This company right now is a $7 billion valuation, so keep these things in the back of your mind. With that being said, on that $7 billion valuation, so we're talking about market cap here, Hinge growth, I think, is very, very, very drastically undervalued. Right now, it's got 27% year-over-year growth. And I think, and based off what I've seen in the reports, I think the company's leaning towards this way as well, that Hinge will be about $1 billion company under their umbrella, brand, I guess I should say, by 2027. So, not necessarily tomorrow, right? But as an investor, purchasing at these levels is something like that is very interesting to me. Now, I'm a little biased and I'm married now, but Hinge is something that I gravitated towards, and I personally used to find my wife. That's pretty cool. And why I think that's pretty cool is because Match specifically has all these other brands. I mean, if you've been watching the show for a while, you know that I also like Bumble for a different reason as a company. But they have these different brands that target different groups of people. I, in my current age, and the time I was meeting my wife, I wasn't interested in going on Tinder because Tinder markets to a certain kind of people, right? So I don't want to be matched with people who are that way because that's not what I'm looking for. I'm looking for something else, right? Having these different brands and seeing growth specifically in Hinge makes me think that we're starting to actually see a cultural shift from the Tinder-esque mentality to the Hinge mentality, which is something that interests me, I guess, from a societal point of view, but more or less to see how, if Hinge continues growth, while Tinder doesn't necessarily die, but stagnates. That would be a good thing in my book, and that would actually be a good catalyst if Tinder stagnates and these other brands start to grow. Because I have a few different reasons, but if people are on Tinder, I feel like, and this is personal opinion, they're not going to be spending money for, I mean, they could be spending money for like super likes and whatever, but they don't take it seriously, so they're not willing to put money down. Some will, obviously. But Tinder is typically being used for hookups, right? People who are on Hinge more than likely are looking for, or Match or OkCupid, whatever, more than likely looking for something a little bit more serious and may be willing, in my opinion, to, and this is all speculative to speak, may be willing to put more money down to actually say, hey, here's some money and help me find someone I like, right? That's where the value is, in my opinion. On top of that, second to last bullish catalyst I have is market growth. We're seeing more people date online. I'm 31 years old. Mostly none of my friends have met their significant other organically in person, unless it's a coworker or unless it's in like the same social circle they've been in at college, whatever. People aren't organically going up, and I can tell you this from a guy perspective, so some women watching may not understand this, but as a man, if I was single and I went to a bar and I went to talk to a woman or went up to speak to someone, I don't have fear of that. What I have fear of if I go speak to a woman in a supermarket is getting maced or punched or screamed that I did something that I didn't do or whatever. And I know, and you can agree with me in the chat or not, I'm not the only guy who feels this way, that we feel like we can't do or say certain things, even though we're not looking to harm or do anything bad, just because there could be some sort of inference that we're doing something bad and can get in trouble. And I know that's a paralyzing fear that I see a lot from people, even on social media, from basically the 20s to my age, is that people in this age group do not feel comfortable approaching women. Some women think that, like, oh, I wonder why men don't approach me or whatever. It's not that you're ugly or whatever. It's that some of us are genuinely scared that you're going to think we're creepy or doing something bad, and then you're going to upload a video of me. It's going to go online, and now everyone's thinking I'm like all these bad things. No one wants that, right? So having more people find this as the preferred method of finding a partner makes a lot of sense. We're in the digital age, right? Everything's on the computer. You're watching me from the convenience of your phone or your iPad or your computer, whatever it may be. That convenience factor is a massive, massive plus. Maybe a lot of guys would be willing to spend money, or a lot of women would be willing to spend money to talk to someone they may not have the confidence to talk to organically in person without a dating app. That's where we're seeing market growth in this segment specifically, and I think that market growth will continue to rise, and eventually it will be more of the norm where over 80 to 90% of people, I'm willing to bet, will say that they met their significant other through a dating app or through some sort of online whatever, medium, I should say. And I think most people would agree with that sentiment if you look into the future. Lastly, the last bullish catalyst I have for Match specifically is that they're looking to continuously cut costs. They recently laid off about 13% of their workforce, and they're recently discontinuing live streaming. They had live streaming on some of their apps, which is very costly. That's why only like a lot of big companies will do it, like YouTube and X. But for like Match, it doesn't really make a lot of sense for them to have live streaming through their platform, so they cut that out. So they're looking to cut more costs down, which obviously increases and helps their bottom line. Now, for bear sentiment. So potential bear catalyst, I should say. I already alluded to this, but Twitter has had declining users for 9 straight quarters. And according to management, they don't think that meaningful growth won't arrive till 2026. Now, in my opinion, that means nothing to me. I don't know how you can predict that growth would come in 2026 specifically for Tinder, unless they mean growth from a financial point of view. But we're talking about users, paying users specifically. And specifically with Tinder, we're seeing that tick down. Now, I alluded to Hinge's growth at the same time. So if we do see, and I don't think this is a bad thing, if we do see Tinder flatline while all these other brands are growing, that actually may be indicative of longer term growth, at least in my opinion. But nevertheless, their big star essentially is Tinder, and seeing that declining users for 9 straight quarters is indicative of why the chart looks the way it does, which again we will get to momentarily. They have had some revenue guide misses. Recently, I believe in Q1 they missed. And again, they're lagging with Tinder's new user recovery. So when people leave, they're having a hard time bringing them back or whatever. Minor risk, because that's more of a short-term risk. So it kind of depends on your timing here. Your third bear catalyst is going to be competition. So we talked about Bumble earlier, but there's other dating apps as well. There's some localized Asian apps that have been getting a lot of interest. And obviously, Asia is a huge market. Which they do have exposure to be clear. But they're putting a little bit of pressure on the market share. Now, I will say, and this part's very interesting, at least to me, that the company has seen a lot of its growth through acquisitions. So you may not know this, but Match acquired OkCupid. They acquired Hinge and another one called HyperConnect. That's where they see a lot of their growth. And I'm of the speculative nature that Match will actually buy Bumble one day. And it makes sense right now. Match is whatever, I think it's 500 million, or I'm sorry, Bumble. Bumble is, $550 million market cap. Meanwhile, Match is 7 billion, or 7.5 billion. So much, much smaller fish. And Bumble's pretty cheap right now, so they could acquire Bumble and kill their competition that way. Which wouldn't be out of the realm of possibilities, in my opinion, for Match, especially if they start to turn around here in the near term, get more money very quickly. They have a reason to just buy Bumble out. Nice and easy. The last bear catalyst I have is privacy law. If privacy law is changed wherever in the world, that could impact how they're using their information to market to their customer. So obviously, if the U.S. government comes out and says you can't use, I don't know, eye color to match people, whatever, right? You can't use AI to determine someone's eye color to match them with another person's eye color. That may impact their service of their eye match color AI thing that they charge $10 for. I don't know. Silly example, but these law changes could impact how they conduct business. Now that goes with any business, of course. So this isn't really, it is a bear catalyst in the sense that it's a risk factor, I guess I should say. But it's not necessarily as strong of an overhang as the previous bear catalyst, at least in my opinion. Now I'll leave you with this before we get into the chart. In terms of our bear and bull catalyst here, does Match do well or not underneath any sort of economic uncertainty? I'm of the school of two different thoughts. Match could perform poorly during times of economic uncertainty due to the fact that people don't have ancillary funds. They don't have money they can just spend on frivolous things, right? They need their money for their groceries and their rent and whatever. They don't need money for their dating app to pay for a super lake, right? Or, the other school of thought, is Match recession proof? Does Match operate in the same sense of a cigarette or beer kind of industry where if we're in a recession, people still buy their cigarettes, people still buy their beer. Do people still use Match through a recession, or Tinder? Are people sad and they use a hookup app more often? Are people willing to pay for money to use a hookup app more often through a recession, through economic hardships? Two thoughts to consider. Personally, I'm leaning more towards it being recession proof, honestly. It might sound foolish, but I do think that people, when they're sad, turn to things that make them not feel sad. Drugs, alcohol, cigarettes, sex. These are things that people turn to when they're upset. If we're looking at the time of, as I previously spoke about before, where it's harder for people just to go out and meet people in general, and you have this thing in your hand, your phone in your hand, and you can just set up a date right away. You have to put in minimal effort, or you're the kind of slime ball that talks to 50 people at once. You can leverage your odds that way. That's why I'm of the belief that Match is actually recession proof, because I don't think it's really going to go anywhere, in the sense that if the economy takes a hard downturn, I think people are going to be spending more money on Match, or at least not removing. They're going to be spending the same amount of money they make or more money on Match to help pad their sadness. So that's my bull and my bear catalyst case for Match. Now let's look at the chart real quick. This is your daily chart on Match, and as promised, that all-time high 179.85 back at COVID-y times, right? And actually, there's a great example of, I mean, obviously everything got very inflated through COVID. Money was flowing like crazy. But during a pandemic, people were still hooking up on a dating app. I can guarantee it. But since then, hard push all the way back down, almost like an enormous head and shoulders here on the monthly chart. But currently we're kind of, let's zoom in here a little bit. Here, let's remove my lines here just for a moment. And this is the monthly chart here, so a lot of time here. We're sitting on some level of starting to build a base here, mainly from like end of 2023 to now, where you could even argue you got some level of like a double bottom here. You wicked a little bit lower through the tariff drama here. But you got some level of like a double bottom down here and leaving wicks all three times, here, here, and here, where price action is pushed back up. So it's looking like Match is forming some level of a base here. And again, these are monthly candles, so it's a longer time frame. If we zoom in here on the weekly, that thought process, that vision, in my opinion, looks even more clear, where we're zooming out, I mean, the same time period, 2023, and you basically have a long base here. If you want to be more anal about the base, you could start in like I said, late 2023, where those lows have been consistently defended and the highs have been rejected as well. Accumulation, a lot of volume coming through down here. And now on the daily, again, this is the most recent low, your 52-week low down here around that tariff drama time, 26.39, currently trading 30.71. And a lot of volume where it's trading right now. This is like your midpoint on the base here. So if you did like a long on Match and you wanted to assume risking the 32-week low here, you're risking about a little less than a $4 drawdown from here. What's your reward? Well, your reward, 180. No, I mean, yes, maybe one day, but realistically, moving up to like mid 60s, or at least going up 100% on this name on equity, if you're patient, I think is very likely. What I need to see. So I've obviously drawn a few levels here. I'll walk you guys through it. That way you have a trade plan if it's something that catches your eye. Obviously, you need to get through the 200 MA here on the daily, and this 200 MA has been in the heart of this base. So it will flux over it over and over and over again. So this, again, is an investor type name. You have to be very patient. Now, obviously, you can find an options trade in here if you like that idea, shorter term. But for the investor, you're going to want to watch these key levels. You got a few bases here. So this last support here at 27.67 before that low, that's the support you want to keep an eye on. Other areas of support / resistance, 31.84, 34.04, 35.57, and this level, 36.71. Hold on, let's get back here. I'll show you why. Because at 36.71, we have a gap, I believe. No, we don't. I thought we had a gap there. Let's go back here. We don't have a gap. I just miscolored that. Okay, 36.71 as another key area. Now, past 36.71, keeping an eye on this. No, I'm a liar. We do have an open gap. Ignore that last 30 seconds. There's an open gap here from 11.6 to 11.7, and it fills at 36.71. Technically, that gap was never filled. So that is a gap to be filled still. I mean, it's filled once we tap 36.71. So near term, you got about 20% to the upside here versus about 10-ish% to the downside. So 2 to 1, even if you're just playing to the gap fill. Past the gap fill, though. Here, we'll go to the weekly just so we can see things. And you see a lot of lines here because I've really charted this one out. 41.52 and 44.08. Next two big levels to watch. If we get over 44.08, then we push into multiple gaps to the upside. Now, I didn't bother getting too in the weeds past this 44 area. But I just wanted to highlight all these gaps to the upside. You got a gap here, 55.97 to 56.93. Another gap at 60.74 to 61.47. Another gap from 64.11 to 71.77. Another gap at 79. Another gap at 105. Now, gaps may not always fill right away. They don't fill all the time. Most of the time they fill, though. And on a name like this, as I've outlined for you with what I think makes this name a strong, bullish stock for a turnaround play, if you're patient, especially on equity, risking these lows here, your risk to reward here is phenomenal. Even if you only wanted 60 bucks on this name, you're risking, again, a $4 downside for a $30 upside. It's 6-7 to 1 risk to reward. If you're patient, I'm of the belief that this is a company that's not going anywhere, that will be making more money in the future. It's got a new CEO that I think is very smart. And I don't think the bear catalysts are that strong. I think this name has been hated on Wall Street for quite a bit. I think Flow, so if you're an option trader, you'll see Flow supports that this name could be a more bullish name longer term. I think this has a lot of good things going for it if you are patient, specifically. If you're an options trader, you might need to time things a little more specifically or carefully. But with how this is sitting, with where it is, for the risk reward you're getting at this current price, I believe Match is a solid name for you to consider in your portfolio. So hopefully you guys enjoyed this little episode of Dumpster Diving. Again, the stock was Match MTCH. Let me know what you think down below in the comments. Don't forget to like, share, and subscribe.